You are about to collect the annual reports of different companies for the purpose of calculating different financial ratios from the financial statements and later on conducting a DuPont analysis. Before doing all the calculations and everything, you need to collect the necessary information from the financial statements which are actually contained in the annual report. I'm going to demonstrate how you can find the financial statements in the annual report, number one. Number two, how to extract the necessary information. And for this purpose, actually, at first, what you need a list of the items that you must collect. Rather than uh, copying the full financial statement in the spreadsheet file, I think it will be very convenient for you to identify the necessary items and collect only those items. For the demonstration purpose, I am using the latest annual report of Square Pharmaceuticals Limited, as you can see on the screen. So if I go to the table of content of the annual report, I can see that the financial statements are on page number 76. If I go there, page number 76, yeah, 34. So this is 76. Okay, that is not actually financial statement. Okay, actually it is on page number 78. Anyway, so you can see that the statement of financial position, which is another name of the balance sheet, and also the consolidated statement of profit or loss and other comprehensive income, that is another name for the income statement. So we have the financial statements here on these two pages. So from here, rather than copying the full financial statement, I suggest you to copy just the necessary items, for the specific ratios that you are going to calculate. So I have created a summary of the different ratios that you will calculate. Under the liquidity class, you will calculate current ratio, quick ratio. Under the activity class, you will calculate inventory turnover, average age of inventory, accounts receivable turnover, average collection period, accounts payable turnover, average payment period, total asset turnover. Then under the debt category, you will calculate debt ratio, debt to equity ratio, times interest earned ratio, fixed payment coverage ratio. And under profitability category, you will calculate gross profit margin, operating profit margin, net profit margin, earning per share, return on total asset, and return on equity. And lastly, under the market ratio category, you will calculate price earning ratio and market to book ratio. So for calculating each and every ratio, you will need several items in the denominator and also in the numerator of the ratio. If we think about, let's say, inventory turnover ratio, for calculating the inventory turnover ratio, you need cost of goods sold and inventory. If you look at the formula, you will find that these two items are there in the formula. The cost of goods sold is actually an income statement item, so the source is marked as income statement, and the inventory is actually a balance sheet item, so it is marked as BS, that means balance sheet. Okay, so this is a summary that will be useful for you to do the necessary things very quickly. What you can do, you can pause the video and examine this one, identify the sources of different elements of the ratios to be calculated. Okay, so after identifying all these items, then another thing is you will find that we may need single item in multiple ratios. For example, cost of goods sold, it is needed in inventory turnover ratio as well as in average age of inventory, and also in average payment period. So you will need the same item several times. I have actually identified the duplicate items, that means the items that will be needed several times, and taken only the unique one, that means not necessarily unique actually. Ultimately, what are the items that you will need for calculating different ratios? For calculating these particular ratios, you will need 20 items from the financial statements and also from some other sources. You can again pause the video and get this list in your notes. Anyway, so as you can see here, we need current asset, which is available from the balance sheet. You know the balance sheet items, right? And current liability is also from the balance sheet, inventory also from the balance sheet, cost of goods sold is from the income statement, sales is from the income statement. Okay, look at this one, purchase as percentage of cost of goods sold. This is not directly available in the financial statement. Actually, you have to collect it perhaps from the notes, and if it is not available in the notes, then you have to make a rational assumption, for this type of company what could be the percentage of cost of goods sold that is actually purchased. So we can discuss about that later on. If you are not sure which percentage to use, you can discuss with me. Accounts payable, total asset, total liabilities, common equity, all are from the balance sheet. Then earning before interest and taxes, sometimes it is also called operating income. For example, lease payment, you cannot find it directly in the income statement or balance sheet. Perhaps you can get it, you may get it from the notes to the financial statement. The notes are actually further elaboration of the different income statement and balance sheet items. For example, if we look at the non-current liabilities, uh, loans and borrowings, this is in note 16.1. So if you go further down, you will find that the notes, okay, the notes start here. We are going to see 16.1. Note 16.1. Okay, here we have got note number 16.1. So here you can see they have the term loan or non-current position, which is this amount, and this amount can be broken down here. They have one non-current term loan from Standard Chartered Bank Kenya, and another one from Standard Chartered Bank Bangladesh. So you can see they have their loan has increased over time. So you can actually find how much loan they have taken in this particular year. Sometimes the loan amount will decrease. So in that case, you will find, let's say there is an amount here, but there is zero here for a particular bank. So you can understand that they have repaid the principal, and that will be the principal repayment here. So these other, whenever I have marked as other, that means you may find the information from the notes to the financial statement, or you may have to make a realistic assumption, or you may get it from some other sources. Okay. So preferred stock dividend, you should get it from the income statement. Sometimes if you do not get, just discuss with me, I will help you to find. Tax rate often is not given directly, but it is possible to calculate or find. Earning available to common stockholder, that is basically the net income. Normally we call it net income after paying the preferred dividend, if the company has any preferred stock. Because they do not have any preferred stockholder, so we can take the profit after tax as the earning available to common stockholder. The number of shares outstanding, this is available in either in the balance sheet or in the notes to the balance sheet. The number of share outstanding can also be found in the even in the annual report, maybe not within the financial statement, but from other areas. And different company has different ways of reporting. Some companies will report the number of share within the financial statement, but this company have not done so. So what we can do, we can collect it from the other place of the annual report, or even if it is not found there, we can find it from the stock market information. I can help you regarding that. You can always discuss with me. And market price per common share, that is always that should always be collected from the stock market. And remember that because your balance sheet date is 30th June, so you have to collect the share price data, market price of the share of that date for calculating the market ratios. Because in the market ratio, maybe one element is market price and another element is from the balance sheet. So these two should have the same date. The information should have the same date, because on July 1 the balance sheet will be changed, and also price will be changed. So if you really want to calculate the, for example, market to book ratio or price earning ratio, you should take the share price of these debt. Hmm. That will give you the very good estimation of the ratio. What you will do, you will collect the information from the financial statement and type in here like this one. And remember, type the information of the earliest year first, then the latest year, so that you can go to the right over time. Thank you very much.